Emerging markets have seen a recovery in recent months after a period of volatility. Potential interest rate cuts and better earnings growth for 2024 are tailwinds for emerging markets. While interest rates are expected to be higher for longer, we believe that they will eventually decline as goods inflation have started declining in most markets. Our overweight positions in Latin America, especially Brazil, a region where real rates remain high, reflect our view on interest rates. Artificial intelligence has seen a boom led by the development of large language models. This has been facilitated by the advancement in semiconductor chips. New applications have emerged. We expect growth in this sector to be structural, driven by the adoption of AI solutions in both enterprise and consumer applications. This should benefit the AI supply chain. Many of the semiconductor and hardware companies catering to the AI industry are based in emerging markets, and we remain overweight that sector. We remain overweight to Korea and are well invested in Taiwan to play these mega trends. Meanwhile, the electric vehicle supply chain is currently experiencing a material slowdown in growth expectations, as many consumers and governments are yet to fully embrace the advantages of their deployment. Although we remain aligned with their longer-term growth outlook for EVs, we have lowered our exposure to EV value chain. India and Middle East countries have continued to see good economic growth. India will have general elections later this year, and we expect political stability to continue. Valuations in many of the sectors in India remain elevated, and we are currently underweight that market, with most of our exposure to the private sector banks. We remain opportunistic in our deployment of capital to the Middle East region, taking advantage of the boom in the IPO market in many of those countries. The Chinese economy seems to have stabilized with signs of policy support, even though the property sector and the government finances are still very feeble. In addition, we continue to see the Western countries reduce their dependence on China supply chains. All these factors continue to impinge on valuations in the Chinese market, and we remain underweight in China. Most of our exposure is to the internet-related names in China, where companies continue to generate cash and have elevated shareholder return policies. It is an interesting time to look at emerging markets. There continues to be uncorrelated drivers of returns in the various emerging market economies. These present an investment opportunity which our team's deep experience, local expertise, and a bottom-up investment approach can uncover.